Schwab Advisor Services is proud to support the RIA Edge podcast and equally proud to support independent financial advisors like you. In a challenging year, how did 68% of firms surveyed in Schwab's RIA benchmarking study meet or exceed their new client goals? By following key success factors such as leveraging new technology, adapting strategies to win new business, and stay connected with their clients, while also attracting and developing the right talent. The Schwab RIA benchmarking study is just one of many ways they provide you with the insights and resources needed to succeed and grow. Get the full picture at advisorservices.schwab.com. Welcome to the RIA Edge podcast. This is Mark Bruno, the managing director of the wealth management group at Informa. And we are very excited to have a special guest here, someone I've known for quite some time, Arthur Ambarik, the CEO of Perigon Wealth Management. Arthur, thank you so much for being here today. We really appreciate it and looking forward to getting to hear a little bit more about the Perigon story.
Yeah, Mark, thanks for having me. Appreciate you guys and everything that RIA Edge does for the industry. So thank you.
Thank you for saying that. And I appreciate that you're taking time. It was a very busy time of year right now for Perigon and for a lot of RIAs. I think a lot of what we've talked about over the last few weeks and months obviously has been related to mergers and acquisition activity. We've talked a lot about human capital and the battle for talent, but you have a really unique position in the RIA ecosystem. So I know a lot of our listeners may be familiar with you and the firm from a distance, but before we get into some of the specific trends, some of the areas where you're seeing growth for your firm and for others, maybe you could just give a brief little overview on where Perigon fits in the RIA industry and how you would describe your business model and objectives.
Yeah, I guess it is somewhat unique. I just a little backstory. I started off as an advisor, 20 something years ago, and about 10 years ago, joined Perigon. At the time, it was, I think, under $150 million in assets under management. Fast forward to today, we're about $6 billion in assets. Obviously not linear. I think we always tell stories as if it's linear. A lot of ups and downs and learnings along the way. I think around 2017, I would say, we decided, at least Phil, the founding partner and myself, that we wanted to go out and bring on other advisors and create a partnership. At the time, I think the industry, I was talking about how the industry had thought of things as very binary, that there were two kinds of firms in the industry, right? There was the consolidator, where everybody was on their own and did their own thing, a very siloed environment where there isn't a lot of collaboration amongst advisors. And on the other side of the equation was the enterprise firm, the firm where everybody did the same thing. Investments being the easiest example of that, right? Most advisors, if you go back 10 years, there were 5 investment models. There was aggressive growth with income with moderate growth, income with stability of principal. Everybody fit into those five models. At the time, Phil, it started with Phil. Phil was an individual stock person, still is to this day, a model that kind of replicates the S&P and takes a value orientation. For clients that I and my team had worked with, it was more of a factor-based investing model. But what brought us together was the idea of bringing different skills and expertise to the table, creating an environment where if we shared in our skills and resources and brought different specialization to the table, that would create a better client experience. And so kind of thought the firm of the future was in the middle of these two models, right? Maybe you have the autonomy and the respect for that advisor-client relationship, but you have that collaborative environment of the enterprise. For lack of better analogies, I always use a good law firm or a good hospital where you have your attorney or you have your PCP, your primary care physician, but if you have a specialized issue in legal or health, they direct you out to the specialist in that area. Now I think more people are talking about this, right? Integration, the firm of the future being in the middle. So, 17, 18, we had a few tuck-ins, as we call them. 2019 brought on a strategic partner to help us out. 2020, we did our first acquisition. I think 2021, we did in 2022, maybe did another one or two. And then in the last, well, second half of 2022 and first half of this year, I think we've done 5 more acquisitions to get us where we are. We've gone from 2 partners in the last 5 years to 14 partners, I think it is now, and we'll continue to have more partners as we grow this thing.
Yeah, and it's amazing, really, to just hear you say 6 billion, right? Up from 150 when you first started. I think sometimes, in RIA Edge, we obviously have a lot of the most successful firms like yours on the show, and it may take for granted just how difficult it is, right, to grow and have some of the success that you've had. And I'm glad you started by saying it wasn't linear, right? And I think for a lot of our listeners who might be in that 250 million to say 750 million dollar zone, right? In assets under management, that valley of death, right? They're trying to get to $1 billion. There's a lot that they can learn from you, right? About what it takes to not only get there, but once you're there, how do you run a firm that is built to continue to grow, right? At a consistent and sort of stable rate. So maybe we can start there, Arthur. And I think it's probably really helpful for our listeners to get a handle on, well, for one, this valley of death thing, right? It's an overused phrase, and I don't know if it's still accurate, right? So is $1 billion, is that really still the threshold for being a quote elite firm, right? And if not, what is? And then the follow-up to that question is, at what point did you feel like, we've built something here that is a really institutional quality wealth management firm, and it doesn't feel like something that's still in the early stages of a small business?
Yeah, I hear that, and I think for a long time people said, yeah, that 250 to maybe 1 billion range was what they call a no man's land. And for me, boy, I think it's always hardest, I think, to get to that first billion. Maybe a little easier to get to 2 or 3 billion, but for me, I didn't feel out of that no man's land until probably closer to 3 billion. And it might have had something to do with a lot of our growth being in the middle of COVID, because it's from a people perspective, right? Especially for us. Okay, we're an advisor owned firm, or I should say majority advisor owned firm. And for us to really professionalize, run a business, we need to have quality people around us running the company every day. So I think for me, it was getting to that point where, we had good, competent people who share our values as, CCO, COO, head of business development, CFO, all of these, CIO, all of these people you need around you to run the business. Also, I think, for folks who are trying to get acquisitive and get into the M&A space, there's good and bad news. I think the good news is there's more opportunity than ever.
Yeah.
And there's more strategic partners than ever. On the other side of the coin, it's far more competitive, I think, than it's ever been, because there's also more acquirers. So getting your feet wet, learning your story, and attracting like-minded people into your firm is, I think, in that 250 to billion or 250 to 2 billion range. There's a lot of that trial and error, admittedly, that happened in those days.
Yeah, I'm glad you said that, right? Because I think it probably hits home with a lot of our listeners. And I think when you started mentioning the specific titles like a COO, a CCO, or CTO, that is really important, right? To remember that that isn't something that every firm currently has or should have, right? You have to have a certain size and scale, right, to really do that. But the importance of specialization shouldn't be lost, right? So there's a few things there that I'd like to unpack maybe. And you touched on M&A. You touched on talent and human capital. You also mentioned, a lot of your growth took place during COVID, right? Which I think, being out of it, fortunately for some time now, we might sort of lose the benefit of hindsight, but it was a really difficult time to build, grow, and manage people. So maybe we can start there, but what are some lessons, Arthur, coming out of COVID when you were doing acquisitions, hiring new people, and really, really, truly growing? Some lessons learned on how you've effectively managed human capital during a really difficult period of time. that you've built on and carried with you into 2023 and likely beyond?
Yeah, I think, boy, it was obviously there wasn't a playbook going into it. So to say any of us knew exactly how to handle that situation would probably be disingenuous. But for us, I think, again, I talk about the importance of people. When you have one or two offices and you have 5 or 10 or 15 people, it's pretty easy. I shouldn't say easy. It's the culture is driven by the main, call it, advisors in those offices, right? The 2 or 3 advisors who run those offices. As you grow, for example, in 2022, we went from, I think, 56 people to 91 people. We now have over 100 people. I talk about these other members of the leadership team. You need everybody to be aligned and everybody to be managing that culture, right? And you need more contact with people throughout the organization when they're working from home. So you really need that alignment on the leadership team. The other thing that we've done, tried to do more of coming out of COVID, is have quarterly in each location, have quarterly offsites where we have a charity day, or people get together in some kind of social fashion. I was talking to our CIO the other day, and she suggested, hey, is it okay if I get the investment team together? And I thought, hey, it's a great idea, right? Today the investment team is I think couple people out in the Bay Area, somebody in Chicago, somebody in Kentucky, somebody in Massachusetts. So it makes a lot of sense, maybe on a team level, to get people together more. I'm sure a lot of people follow Adam Grant, the management, pretty famous management consultant. He talked about, coming out of COVID, that figuring out ways to get people together in person, especially if they're part of a team. Their studies are showing that it's really important. So more of that, but again, the management team being aligned with their messaging and around culture is more important than ever, as people are either hybrid or remote today.
Yeah, and I think what I'm hearing more and more of in your commentary and a lot of these discussions is really just kind of comes down to focus. There was a lot of growth that took place during 2020 through 2022, right? A lot of it was mergers and acquisition, right? But a lot of it was obviously through, for the first time ever, you could more or less market your capabilities, deliver your services to anyone, anywhere, right? Being within 25 miles of where someone lives, right, was not a core part of your value prop anymore. So it's an amazing opportunity for the industry, but in the process of everybody being remote, and your investment department example is a really good one, you just have to be ruthlessly focused and determine what are the clear lanes that everybody is sort of swimming in. So I appreciate that sort of the structural overview you gave, but obviously the importance of bringing people together to maintain that focus and sort of build on some of your strategic planning is critical. With that, I would also just sort of ask, we've talked a lot, not just on the podcast, but you and I have talked about it in think tanks and other areas, but the battle for talent right now. We know a lot of the largest RIA firms are actively recruiting for brand new positions. We did some research recently where we found that about 2/3 to 3/4 of the largest RIAs are hiring a role right now that they've never had before, right? Pretty amazing sort of demand for talent. Are there specific roles that you're looking for right now? And are you seeing certain areas of need when it comes to talent that are emerging as new, right? And potentially more important than ever for your future growth?
Yeah. First off, the battle for talent. I actually think for the consolidation is going to create a lot of opportunity. That this is something that smaller and mid-sized firms should really. This is a really important topic.
Mm-hmm.
I think there's a lot of opportunity for small and mid-sized firms over the next few years to get really, really experienced, talented people, because that's going to be created through consolidation.
Yeah.
Right. When there's consolidation, especially on the higher end of the market, there's going to be positions within those two firms that are duplicative, resulting in really talented people coming to the market. so this is, so companies, our size and smaller should be really thinking about, okay, what are these positions that we want to invest in? So for us, I think growth is an area that we're probably focusing in on, trying to find talent. We hired our first director of marketing in January, and that's been really great for us. There's more opportunities for
Mhm.
firms to compete for clients than there's less barriers to entry than there were previously in terms of the large opportunities. Firms who have had great organic growth, they've either spent a lot of money on marketing, I think, in a lot of cases, or they've been part of some of the custodial referral networks. And in a lot of firms that are smaller, don't either have the money to spend on the marketing to compete, or they're just not part of those referral networks. With the onset of all of these different digital marketing companies, lead generation companies, there's this opportunity to have a director of marketing, for that director of marketing to go through the advisors, talk to them all about their niche and find the best way to create an online presence for them and to get new clients that way. So that's something that we're investing in. And then as you grow, there's a lot of normal things that get more complicated, compliance, financial side of things. So you got to make sure you keep working on those. And then the other thing that this is a big thing for smaller firms to think about. In full disclosure, I think the first acquisition we did, the transition took about a year. The next one maybe took almost a year. I think now we're down to a month or two.
Okay.
But if you're thinking about getting into the M&A space, having a built out transition team is critical for you as well.
Oh, absolutely. And I definitely want to touch on that because I think it's very, very important. But I do want to touch on organic growth. And more specifically, you mentioned this hire, right? This director of marketing role that you added in the beginning of the year. I'm very interested in that. There are probably, we've done some research. It looks like less than 15% of the firms, the RIAs in this space, actually have a director of marketing or a chief marketing officer. They may have sort of mid-level or lower level marketing roles, but not somebody who sort of strategically has a seat at the table, right, with the executive team. And is thinking about marketing. It tends to happen when you hit a certain threshold, whether it's 2, 3, 4 billion. That threshold is when the contributions of the partners, if it's 10, 15, 20 million a year, just don't move the needle as much, right? So this approach to more, let's call it one to many growth, right? Strategies. 2 questions for you. One, where did you find your director of marketing, and did they come from the wealth management industry, or did you have to go outside, right? And then 2, what are some of the things that you would like to see as it relates to marketing and the continued increase in organic growth that Perigon experiences?
Yeah. So the whole thing, that's all so interesting. At the RIA Edge conference, Paul and I had a session where we talked about the lack of marketing in Paul from worth.com and I had a conversation about the lack of marketing that happens in our industry. It's the numbers are interesting. The organic growth of most firms net of markets is becoming a popular topic, is very, very low traditionally, right? Some say it's almost flat, some say low single digits, whatever it is, it's not much net of markets. And then for an established advisor, the average closing rate, meaning the when they get a referral, the rate at which they convert that referral to a client is very high. I've heard as high as 70%. And what that means is that a lot of folks out there have gotten comfortable, and a lot of firms have gotten comfortable or resigned themselves to a strategy which is getting referrals from existing clients, which, by the way, is something that should always be a number one focus, right? Servicing your existing clients well so they refer people to you. We're not talking about anything that takes the place of that. It will continue to be for a lot of firms a good source. You said one to many. That's interesting, right? The issue with that strategy is it's a network that you're in. It's a niche that you have. And over time, that network, that niche can get more and more saturated. Whereas some of these other, in particular digital lead generation, every time you get a new client, it's a whole new network, right? And if you service that client really well, they will then refer other folks to you. So opening it up makes a lot of sense in terms of kind of expanding that web of referral possibilities. You asked about our marketing person. She came from outside the industry, and she immediately thought it was pretty shocking how little us in the average firm was doing around lead generation, around online presence, around all of these things. And so I think I was talking earlier about enterprise versus consolidator, and that enterprise firm where everybody did the same thing historically, and then I talk about the firm of the future where we have all this expertise, and we can manage. The value of having all these people is we can manage all of these different types of clients. And you connect the dots between that and a marketing person in all of the lead generation tools. You can create something pretty powerful and exponential. I think we're in the early stages. I mentioned we just hired her in January, but we're already working on deepening our relationship with a couple of these lead generation tools companies, where we acquired an RIA tied to one of the larger tax firms in the country last year. We're working on deepening that relationship. So it's I think, again, some of these firms, and I've said this to a lot of people I know, some of these firms who historically have just grown through referrals, there's something out there for them to take their niche to the marketplace, and hiring somebody sooner than later is probably a way to do it. I think there's also, Mark, a lot of talk lately about people have really been focusing in on inorganic growth, and for those companies that don't also focus on organic growth, they might run into some headwinds here. For Perigon, we've been pretty fortunate. Outside of net of markets, I think we've run 10 to 15% organic growth consistently. So including markets, high teens pretty consistently over the last few years.
It's very impressive. We know, by and large, that most true organic growth, excluding markets, probably been in the lower single digits for most firms for a very long time. And we always talk in terms of percentages, right? But it's all relative. The larger the firm, the more impressive the growth rates are when you're doing double digits the way you are. I do want to just sort of sum up also, just like we said before, the word that kind of comes to mind when you were talking about your structure and your people was focus. When you were just talking about some of the organic growth and some of your hires, the word that kind of comes to mind for me is options. There are more options than ever before, whether it's for putting new people in new roles or some of the technology lead generation tools that are available, right? So that's great. I'm glad that you brought that up, because we don't tend to talk about that enough here on RIA Edge. Navigating those options, right? Because not everybody can do everything all the time, of course, is complex, but better to have more options to evaluate than to have far fewer and just have to rely on the same traditional sources, right, of growth. So thank you for expanding the view a bit. Appreciate that. And I do want to pick up on the M&A piece, right? And maybe that's a good place for us to land here, because there's always, it doesn't matter what the market conditions are these days, right? M&A is always top of mind on every podcast that I do, every conference I go to, and every side conversation I have. There's some discussion around what's the market look like right now. Is M&A activity up or down? What are valuations? What are the multiples? Putting all that to the side, right? Or I'd love to just get your take on what role right here in July of 2023 you think M&A can play in the growth of a really good, well-run, successful RIA firm moving forward.
Oh, I think I think over the next, I can say post 10 years, what will happen, but certainly over the next 5 to 10 years, it's going to continue to play a huge role in the growth of companies. I think there's a couple different models out there for folks. I talked earlier about the partnership model. For me, that's the direction we decided to go into.
Mm-hmm.
We wanted partners who can come in and, expand our intellectual capital base, our expertise, and build something in that way. There's really three components that people need to think about, right, from M&A, very simplistically, and I think our industry is pretty opaque about this. I'm not gonna lie. I think it's somewhat difficult to navigate the landscape,
Mm-hmm.
but the very basic, foundation. There's three components to M&A. There's equity, there's upfront cash, and there's cash over time. Okay. And so if somebody's thinking about getting into M&A, that's what they need to think about is, do I want equity partners? Do I want to give up equity? Do I want to get diluted? Is that dilution going to be accretive? For us, we've made the determination that the dilution is accretive to us and our company and our clients and employees and partners. And then if not, what's the source of capital going to be? Or if it's going to be some combination, which often it is with us, right? Where's that source of capital going to come from? Is it going to be in the form of investment, or is it going to be in the form of debt? But the opportunities, enormous for everybody. Our first acquisition was a little bit more of a merger in what would be termed an equity swap. And as we went through that, I remember Jeremy saying, what could go wrong here? And I said, well, we're becoming partners. So what could go wrong is culture. So, we got all the teams together, right, in one location. We had everyone meet each other. We just wanted to make sure. It took probably a year to formalize that partnership, because we really wanted to make sure that we all wanted to work together. So I think that's critical if you're going the equity route. If you're going more cash route, then do you have the team in place to service those advisors? There's so much to think about, but at its core, I think every firm should be thinking about it, because ultimately, especially in today's environment, as we talked about with digital marketing, the sum of the parts is should be greater. There should be a situation where the sum of parts is greater, right, than the individual pieces, and that's what we found. So I would encourage everybody to talk to people, learn. There's so many experts, as out there in the space today, that can help people think about this and formulate a strategy. And I think if you wait, there's always going to be room for smaller firms, but there's going to be a lot of consolidation in the space over the next 10 years. And I think there is a very reasonable case to be made that 10 years from now, there'll be much less optionality for all of these folks than there is today.
I agree, and we'll have to schedule that 2033 RIA Edge podcast interview now to come back and revisit. But on the whole, I think that the comment you made just around how opaque the industry is, right, when it comes to M&A is important. That's why we do this podcast, right? I get a lot of calls from people asking me, what's the difference between firm A and firm B, right? If I go here, do I have to use their technology? Do I have to centralize my investments? Do I have to give up my name and logo, right? And you think after the last several years of several hundred transactions, people would really truly understand the different types of buyers that are out there, let alone just sort of the deal mechanics, right, that go into it. But there's still a lot of education. It's still, while it's an industry in growth mode, it's still very fragmented, right? So with every one of these conversations, we hopefully are able to make, if not transparent, right, the M&A world a little bit more translucent, and we can shed a little bit more light on some of the realities of M&A. Go ahead, Arthur. Yeah, please.
No, because what you just said is important. It's funny that you mentioned two issues there: technology and branding. I think early on, because we like to think of things in binary terms and binary outcomes, and because it's simple for us, I had very hard, straight rules about that kind of stuff. And over time, I've learned to be more flexible. Sometimes it makes sense for somebody to keep their branding, right? Yeah. Sometimes it makes sense to delay the transition of, your CRM, whatever it might be. So I just think if someone's just getting into the M&A space, I would say stay open-minded, be flexible, and focus on, again, if these are people you want to work with versus whether they want to use the same CRM or investment platform that you do.
I think that is a phenomenal common sense point to end on there, right? You don't necessarily hear a lot of people in your seat, talking about that kind of flexibility, right? But I think it's important, right? Because not everybody is designed to be, I don't want to use the term professional buyer, but a serial acquirer, right? That has to scale, right? That has to create that sort of centralized, control that a lot of people think, right, might be common across all of the most active buyers out there. So Arthur, thank you for shining a light on that. I appreciate it. And thank you for stopping by the RIA Edge podcast. We've talked a lot over the years, but I think this is the longest and most in-depth conversation we've had. And I really, truly appreciate you spending as much time and also just offering as much insight into your business as you did.
Yeah, thank you. I enjoyed the time, and always appreciate talking to you, Mark, and looking forward to connecting again soon.
Same here. And Arthur, again, congrats on all the growth that you've had at Perigon. Again, while we talk about and talk to firms that have grown quite a bit over the last decade or so, we don't want to take it for granted. We know that it's a ton of hard work, a ton of strategy planning and execution that supported that. So congrats. Thank you for sharing some of your thoughts and best practices and providing recommendations to our audience here. So again, Arthur Ambarik, CEO of Perigon Wealth Management, thank you very much for stopping by the podcast. Thank you to everybody for tuning in here today. We hope that you found this to be very, very valuable in thinking about your firm's next stage of growth. And on behalf of the entire wealth management team at Informa, thank you very much for tuning in. And we look forward to having everyone back on the next episode of the RIA Edge podcast. Take care all. Schwab Advisor Services is proud to support the RIA Edge podcast and equally proud to support independent financial advisors like you. In a challenging year, how did 68% of firms surveyed in Schwab's RIA benchmarking study meet or exceed their new client goals? By following key success factors such as leveraging new technology, adapting strategies to win new business and stay connected with their clients, while also attracting and developing the right talent. The Schwab RIA benchmarking study is just one of many ways they provide you with the insights and resources needed to succeed and grow. Get the full picture at advisorservices.schwab.com.